Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Monday morning pre-market webcast. Okay, here's a daily chart of the S&P 500 E-mini futures, and effectively what we have here is, we've got a rally. Whether that rally is a sell rally at some point remains to be seen. You can't sell a rally without a rally. I mean, we're still comfortably below the mid band up at 2096.5, which is our delineator for a buy dips versus sell rally kind of an environment. We had a nice low Friday afternoon down at 62. We didn't buy the low. We tried to identify the higher low and ended up with a buy area about 63 to 65, which we've taken profits on. We took some profits on Friday. We took some profits this morning. We're rolling up our stops. And where we're rolling up our stops to is important as far as where we are headed today. Here's a 15-minute chart. The new weekly pivot is right around 2080.90, so basically the 2081 area. What you saw in the 7 o'clock hour is you saw a pop up to 83.5 that then kind of did a little flag back to the weekly pivot, held it as support, and then we broke out. We're seeing a move above the monthly pivot now, 2083.60, our old friend the monthly pivot. I'll be very interested to see if 2086.30 now holds as support. If it does, then it can certainly extend up and test the 50-day exponential moving average and the 9-day simple moving average, he tried to say, up around 91. If these areas start to break down and become resistance, then the bears can, affect a little bit of a retrace. But for me this morning, it's going to be all about, does the monthly pivot want to be support? Does it want to be resistance? On a big pullback to the weekly pivot, how is that level going to react? On the upside, how does the 50-day react? How does R2 up here at 93.17 react? And ultimately, if we get there, although it may be a little bit much to ask, but it's certainly a question for this week, how will the midband react up at 96? So that's the landscape that I'm looking at this morning. On the downside, if we do break weekly pivot, you've got to look at 74 as a key area with maybe a little stop at 77. All right, that's all I got for today. Everybody have a good one. Follow us on Twitter at Princeton Trader. I posted something on there on Friday, reposted it this morning. It basically walks through how we identified the low and the higher low on Friday afternoon and did a buy area. It's a nice little window into how we try to do things in the room to get a fairly risk responsible trade on. Because even if that area had broke down on Friday, we had a 62 risk marker, and you're just risking about 3 handles, which is pretty common. But that kind of walks through how we see things when we come into big areas. All right, and you can always check out the website PrincetonTrader.com. I posted a recording of the webinar that we did last week. Keep an eye on the Twitter stream for the next webinar. I will be back tomorrow morning with another webcast. Trade them well, everybody.